Hey there, it's Dave Keller with Market Misbehavior, and today we're going to be looking at 3 top stocks in the industrial sector. Now, a big part of my process as a technical analyst is to always be scanning or screening for new ideas. One of the things I do on StockCharts all the time is looking for stocks making new 3-month highs and new 3-month lows, or 13-week highs and 13-week lows. Now, why do I do that? Well, I've found that looking at new 52-week highs can be pretty helpful, but it often helps you find stocks that are in consistent uptrends, stocks that have just been working for a long time. By looking for stocks making new 3-month highs and 3-month lows, you get those names too, but you also get some of those stocks that maybe have been underperforming for quite some time and are now really starting to work. What I also use is what's called the Scooter rankings, the StockCharts technical ranking. Now, this is a proprietary ranking system that the StockCharts platform provides, and it basically allows you to look at a group of stocks like an industry or a sector or a broad market and focus on the names showing the strongest trends on multiple time frames. So it has a long-term, medium-term, and short-term component, all aggregated to what's called a Scooter ranking. Today I'm going to share with you the top 3 ranked stocks in the industrial sector using those StockCharts Scooter ranking, why I think the charts continue to show strength, and how I would alert myself if those trends would start to reverse. Before we get to the charts, by the way, if you like this sort of thinking about technical analysis, market history, and investor psychology, why not subscribe to my channel? Also, give the video a like if you appreciate it. We would super appreciate that back. Put a comment below. Which of these three names do you think is the most attractive here and why? Did I miss one of the names? Which other name in the industrial sector do you think deserves to be on this top 3 list? Let me know in the comments. Let's look at a chart here of the industrial sector, the XLI. And I'm going back for the last 3 years. We can really track the move off of the the March 2020 low. So I'm starting in June of 2020. So we see this nice move higher through the end of 2020, a continued upswing to an all-time high in May of 2021. Now, I have this pink shaded area. We're going to come back to that a little later, but notice how the subsequent tests in June, in August, in November of 2021, and then again in January of 2022, I would all consider those failed attempts to eclipse that all-time high from May of 2021. Now, if you look at the relative strength on the bottom, you can see that the XLI, the industrial sector, was actually doing quite well, and it made a new all-time high in May of 2021, also a new relative high, meaning it was consistently outperforming the major benchmarks like the S&P 500. In the second half of 2021, though, the stock hit a resistance level and never went higher. Think of the chart of the S&P 500 or the NASDAQ in your head, and if you think about it, the second half of 2021 was actually exceptionally strong. That's why this sector making basically a flat performance stretch allowed it to underperform pretty significantly. So because the price was not going higher, the S&P was going higher, that causes the relative performance to go down, meaning owning in the industrial sector here caused you to really underperform the rest of the market. Now, industrials sold off in the first 3 quarters of 2022, just like the rest of the market did as well. That's why the relative strength is essentially flat. This sector is down, but the broader sector was down as well. So overall, you didn't lose much on a relative basis, but you certainly didn't help your portfolio on absolute terms. You're down about 20-25%, depending on exactly where you may have bought and sold during that period. The fourth quarter of 2021 was exceptionally strong on a relative basis. So the industrial sector bottomed out in late September, rallied, and actually outpaced the S&P off of the lows in October of 2022. That's why it outperformed. Now, 2023 has actually been a pretty tough year for industrials. The price has actually held pretty steady, and it's held above its 200-day moving average, but the relative strength line is going down because the large cap growth trade has been working so well. Stocks like Meta, Alphabet, Amazon, Microsoft, Apple, Nvidia have all had incredibly strong years. Those are mega cap growth stocks in sectors like technology and communication services. Because they have done so well and because they propelled the benchmark so high, that is why the industrial sector has underperformed so dramatically. But look at what's happened here in June of 23. You're actually starting to see a nice bounce, and the industrial sector is once again testing new all-time highs. The relative strength is starting to turn higher, which makes me think this could be an interesting opportunity if and when that large cap growth trade, the technology communications names start to roll over, maybe a sector like industrial starts to do really well on a relative basis. Now we're looking at 3 top ranked names in the industrial sector, because if we feel like industrials are going to work, why not own the strongest names? One of my longtime friends and technical analyst, John Roque, used to say, if you're going to put a team on the field, why not put your top performers? And he used to relate it to baseball, right? If you are the manager of the Boston Red Sox and you want to defeat the New York Yankees, are you going to put some of your, underperforming players, some of your players that are going through sort of a hitting lull, ones that are struggling, are you going to put them on the field, or are you going to put your top performers on the field, your top players? What's going to give you the best chance to outperform the other team? Why do anything different with your investment portfolio? So here we're looking at the top 3 stocks based on the StockCharts Scooter ranking. And again, that's a proprietary ranking model, although you can access the calculations on the StockCharts website. And basically, these are the 3 top ranked stocks in the large cap space in the industrial sector. Builder's First Source, BLDR, is the first stock, and you can see it's had a pretty strong run from starting the year around $65 a share. It's almost been a double. It's just below $130 a share. Made a new 52-week high this week. The second stock is GE, a name that's probably well known to many of you. General Electric. There's been some spin-offs with parts of the GE family, but overall the price has been consistently strong. At the end of last year, it was around $65 a share. We'll call it currently around $105. Finally, Copart, CPRT. If you're not familiar with this, they do online auctions for automobiles, some other businesses as well. The end of last year was just above $60 and currently around $89. It's about a 50% gain year to date. So relative to other stocks in the industrial sector, these stocks have actually done incredibly well, particularly well. And there are other names in each of these groups that have done well also. But again, these are the top ranked stocks right now. Now, what makes these charts so strong here in June of 2023? I think it goes back to Dow Theory 101. And that's what Charles Dow in the early 1900s basically created, this idea that a market trends, right? Things move in trends, and you can quantify those trends by looking at the highs and the lows, the peaks and the valleys. So with BLDR, with GE, and with Copart, what you'll notice consistently is that they keep making higher highs and higher lows. And what that means is during a rally phase, we go higher than the previous high. We make a new swing high, as I often say. Then when we pull back, the low of this recent pullback is higher than the previous low. So that's why I always say higher highs and higher lows. What else can we see consistently across these 3 stocks? Well, all 3 of them are above an ascending 50-day moving average. That 50-day moving average, or the 10-week moving average, is a commonly used technique. When you have a strong chart and it pulls back a little bit, often you'll find stocks hold above an ascending 50-day moving average. And all 3 of these stocks have done so fairly consistently in 2023. So all 3 of them at or near all-time highs in the last couple weeks. All of them, I would argue, as they continue to make higher highs and higher lows, continue to show upside potential. What would tell us that these trends are no longer working? What's great about the trend following approach that we talk about, or what's called momentum investing, is that you focus on strong trends, own things that are in strong uptrends, and then have signals, stops that would tell you when those trends are no longer in place. So what would tell us that this is no longer working, that a chart like BLDR or CPRT is no longer in a strong uptrend? Couple things. Number one, I would look to the left and see those most recent lows. So on BLDR, it's around 110, we'll call it 112. On GE, the most recent swing low is around $100 a share, a big round number. And then on Copart, it's probably 85, 50, 86. And I'm just basically looking at the most recent swing low on each of those charts. What we could do is set a price alert. So here on the StockCharts platform, I could say, all right, tell me when CPRT closes below or trades below 85.50, which is about that low right there. So I'm going to go to my alerts, and basically you can find this if you go to Charts and Tools on StockCharts. You can go to Your Alerts, or just click on your name in the upper right, set up an account. You should do that, and then click on Your Alerts. What you do is enter the symbol. So if you put CPRT, it's going to bring up a little preview chart. You can remember exactly what this is kind of looking like. And I'm going to say, tell me when it crosses below 86. And I'm going to say, email me, text me, and give me an alert at the top of the website. I'm going to hit Save Alert, and it's done it. When I go to My Alerts, you can see that I use this feature all the time. These are all alerts that I've had that have just recently triggered, and I often am deleting them and adding new ones. But I use this all the time to basically track when stocks that are working are starting to not work anymore. You want to do something a little more sophisticated? What about using the 50-day moving average? You can actually use the advanced alert function in the technical alert workbench to set an alert when it breaks a moving average. So say, tell me when any of these stocks break below their 50-day moving average. Alert me, give me a text message, then I can look at the chart in a little more detail and see if it's continuing to work. All three of these stocks, BLDR, GE, and CPRT, have been in strong uptrends. The good news is the Technical Analysis Toolkit has a bunch of tools to help you anticipate and identify when those uptrends are no longer working. For now, these are three top stocks that are continuing to show strength. What do you think? Do you like any of these three names in particular? Put a comment below and let me know. Or is there a name that I missed out of the top three stocks in the industrial sector? Hit me a comment and let me know why you think it's more attractive than these three that I portrayed today. For Market Misbehavior, I'm Dave Keller. Have a great one. I'll talk to you again soon.